Hi, everyone, and welcome to our iOS webinar titled Easy International VAT in Time for Black Friday. My name is Bonnie. I'm with the customer success team at SimplyVAT. I will be presenting this webinar together with my colleague Maria, our iOS coordinator, who will be answering your questions during our Q&A session. We're really excited to have you join us today as we help you prepare for Black Friday, which takes place at the end of November. Throughout today's webinar, you can use the chat in the right-hand side of the screen to share your questions. And after today's session, we'll be following up with a few tools for you to kickstart your Black Friday sales, including a special discount, an iOS ebook, and a checklist to make sure you are ready. So please keep an eye out in your inbox for an email from SimplyVAT. Now let's get started. So what's on our agenda for today? We'll be discussing the importance of capitalizing on Black Friday. Next, the impact of international market expansion on sales. Then enhancing customer experience through iOS optimization. We'll follow with utilizing iOS to overcome barriers to new markets. We'll share our exclusive promotion. Then lastly, we'll have our Q&A session where we'll answer the questions you've put in the comment section. So why maximize Black Friday in the EU? With Black Friday around the corner, it's important to look at how your business can benefit from this period. During this time, consumers are actively seeking great deals and specials to maximize on their purchases. There's a high demand for goods, which means increased traffic online, which can lead to more visitors to your website. This expands your brand awareness, which can result in higher sales, and we all know how higher sales can increase your revenue stream. This not only can expand your customer base, but can help clear out any stock that you have had for a while and you want to let go of. Based on the experience your customers get from you, it might even lead to more brand loyalty and can retain your customer base beyond Black Friday. We'll look at what this looks like on the next slide. Last year, Remazing analyzed the sales of 4 EU countries, as well as the UK during the Black Friday period. These countries are Germany, France, Italy, and Spain. As we can see, Germany had the highest increase in sales by 203%, France 133%, Italy increased by 77%, and Spain by 93%. This is a testament to the demand from customers and the benefits that any business can experience if they choose to cash in on Black Friday. So how opening international markets improves sales? We look at that on the next slide. Opening your business to international markets can improve your sales and increase revenue generation by giving you access to a wide variety of customers. The EU has 27 member states, which means your business can tap into different markets, which not only increases your website traffic, as discussed earlier, but also your reach with these customers. More countries would know about your brand and products, leading to a wider loyalty base. So the next question is, what do I need to do to tap into these international markets, and how can I ensure I'm VAT compliant? When selling your goods to different markets, it's very important to understand your VAT obligation as a business to remain compliant. You have the option of charging DAP, delivery at place, where your customer would be the importer of record and pay the VAT charges at the border. This can result in a poor customer experience, leading to negative review, or the customer refusing to pay extra charges, which leads to a return of the item and you needing to refund your customer. To avoid this, you also have the option to decide to handle the VAT, DDP, delivery duty paid. As a business, you would charge your VAT where your customer is based, and if you're selling on your website, you are responsible for collecting and remitting the VAT. This can mean that registering for VAT in each EU member state where your customer or your private customers are based, which means you would need to keep track and file returns based on each country's filing frequency. This can be rather daunting when you're too busy trying to run a business. That's where the import one-stop shop comes in. What is Import One-Stop Shop, also known as IOS? IOS is an optional, simplified EU VAT scheme that allows businesses to access all 27 EU member states through a single VAT registration. As a business, you would report the distant sales of your imported goods shipped in an intrinsic consignment value below 150 euros. This means the goods need to be outside the EU at the point of sale. You would charge and collect VAT using the VAT rate where your customer is based. Then in single monthly returns, you would report and remit the VAT. On the next page, we look at the definition of intrinsic value. The EU Commission defines intrinsic value for commercial goods as the price of the goods themselves when sold for export to customs territories of the Union, excluding transport and insurance costs, unless they are included in the price and not separately indicated on the invoice, and any other taxes and charges as ascertainable by the customs authority from any relevant documents. I hope this clarifies intrinsic value for the 150 euros. So how does IOS work? Non-EU established businesses need an intermediary in the EU to register for IOS, and that's where we come in. The imported goods need to be sold to only private customers, in other words, B2C sales in the EU using the standard VAT rate. It doesn't apply when selling to registered businesses. If you're not sure of the VAT rates for your physical goods, we can help you determine this as an additional service. The VAT must be displayed, charged, and collected at the point of sale where the customer is based. And the benefit of using your IOS number is that you don't pay any import VAT or duties at customs when importing your goods into the EU, but you would need to report them on your monthly returns. It's also important to keep record of your sales for an additional 10 years in case you get audited. And once registered, you need to complete your monthly IOS declarations. So who can apply for IOS? With us, we can assist with non-EU established businesses and EU businesses established in the Republic of Ireland. Then the next question is, where does IOS not apply? As mentioned earlier, IOS doesn't apply for B2B supplies, business to business. It can't be used if the goods are already in the EU at the point of sale, so only for imported goods. You can't apply it to your zero rate or VAT exempt sales. The consignment value of your business sales cannot go over the 150 euros, and nor can IOS be used for supply of services. It must be physical goods. Lastly, goods with excise duties such as alcohol and tobacco would also not qualify. Let's look at two case studies as an example. So the first case study, we have a US established business that is looking to sell clothing via their own website to customers in the EU. Their products retail at 60 to 100 pounds per item. They want to take advantage of Black Friday, but don't want their customers to pay extra fees at the border. So we ask, are the three conditions for the IOS scheme met? The goods are located outside the EU at the point of sale. The goods are sold to private individuals and they don't exceed the 150 euro consignment threshold. So this means the US business can apply for IOS. They can charge and collect the EU VAT at the point of checkout and remit in single monthly returns. And they can also remove additional fees at the EU border for their customers, which then offers faster delivery times. Let's look at another example. Case study 2 is a UK established business that is selling home decor via their own website to customers in the EU. Their products retail between 60 and 200 pounds per item. They're saying that their EU customers are being charged extra fees at the local border and are returning the goods or returning the orders. So we ask again, are these three conditions met for the IOS scheme? The goods are located outside the EU at the point of sale and they are sold to private customers. Some of the goods are not exceeding the €150 consignment threshold, which means for those goods, they can use the IOS scheme. So what about goods that are over the €150 threshold? The UK business can either make the EU customer the importer of record, as mentioned, or act as the importer of record themselves and register for VAT locally. I hope these two examples have helped. Now to share the good news. We're offering a discount code for 50% off iOS registrations to help you get started on your cross-border journey. This code is valid until the 31st of December. However, if you would like your iOS number in time for Black Friday, please make sure your application is in by the 15th of November because iOS registration takes 1 to 2 weeks to obtain after submitting the application to the tax authority. We will be sending you the code via email, which would include the iOS ebook after this webinar. Please make sure you input at checkout to receive the 50% off. So we've reached the end of our presentation and will now be moving to the Q&A section of our webinar. As mentioned at the beginning of the presentation, Maria, our iOS coordinator, is here to answer your iOS questions. Maria, please introduce yourself.
Hello, everyone. Yeah, my name is Maria. I am the iOS coordinator at SimplyVAT. So if you have any questions related to how iOS works, just please pop them in the comment section. Okay, so the first question is, which supplies of goods are covered by the import scheme? Basically, what the iOS covers are the distant sale of imported goods. So that means goods that are dispatched from outside the EU into the EU to customers, so only B2C, that are inside of the EU. Then those goods are dispatched in a consignment that the intrinsic value does not exceed the €150. And also for goods that are not subject to excise duties, like Bonnie mentioned, alcohol, tobacco, etc. So those would be the rules for the iOS supplies that are covered. What is an intermediary? So basically, we work as an intermediary for the customers that are located outside the EU. So if your company is inside the EU, then you register in the country where you are based. But if you're based outside, you need an intermediary that's based inside the EU. And basically, that's the iOS VAT declaration for you. So on your behalf, basically. When to apply the VAT? So basically for iOS, the VAT is applied at the point of sale. So the moment that the customer buys the goods, that is the point where the VAT is charged. So for example, this can happen when you have a sale in the month of September, but you don't dispatch that until the order is not dispatched until October. That is that VAT for that sale needs to be declared in September because that's when the point of sale happened. The intrinsic value means basically the price of the goods. So excluding transport or like insurance costs or any other cost that can happen at the point of the sale. The intrinsic value is basically only what the goods are worth. So that is where the threshold is calculated. So the €150 threshold that we have for all the iOS sales. This means that it's only for the goods itself. So anything else extra does not belong in the intrinsic value. So if it exceeds €150, that's fine because the goods do not. That's basically it. Okay, so basically, the question is, what is the iOS process from registration to VAT declaration? So once the process of registration is sorted and you have your iOS number set up from the official registration date, so if it's, for example, the 2nd of October, it means that any sales that are happening from that day up until the end of the month would go on the VAT return for that iOS month. So what would happen is we work on the subsequent month. So for example, now we are sorting out September returns for the iOS clients. So at the beginning of the month, you will provide the data, where it's manually or through an API integration. We would get that data, and then we would create a draft, which basically will do the summary of all the different sales that you had to all the different countries in the EU, and then the total VAT due in general. So all the different amounts that are due in the different countries. Then with that, we're going to send you that draft. And then with that draft, you can review it. You can make sure everything has been added correctly. And then once that is done, you can just pay directly, because we work on your behalf as your intermediary. We collect the VAT and the payment for that VAT due, and that is declared to the tax authorities by us. So then we would get your payment, and then we would do the submission before the end of the month. So basically the deadlines for iOS are the end of every month. So once we get your review and your approval, we get the payment, and then we go ahead, submit, and then you get the submission confirmation that everything has been done. And that would be the monthly process. And then the beginning of next month, we do the same for the next month, and so on. And I believe that was the last question.
Yes, looks like it is the last question. And just an important note, iOS cannot be backdated, so we can't backdate. So if you're interested and you'd like to cash in on Black Friday, we would encourage you to reach out to us. That is the end of our Q&A session. Thank you to everyone that joined us today. We hope to hear from you soon. You can reach out to us on Here to Help at SimplyVAT if you'd like to take advantage of our iOS in time for Black Friday. As a reminder, you need to submit the application by 15 November. We look forward to hearing from all of you. Thank you again. Goodbye.
Thank you. Bye.